Welcome to the SPX options trading series by alphacrunching.com. Now let's get into the video. In this video, we're going to look at the weekly time series chart of SPX from alphacrunching.com. And let's talk about how the chart is set up first. On the y-axis, we have the average number of SPX points. And on the x-axis, we have time, which includes the day of week and time of day. Now these charts are updated each weekend and are available before the week starts. In this example, we are looking at the chart for the week of October 3rd, 2022. This chart became available by October 2nd, 2022, so that you have this chart before the trading week begins. And what we've done is broken down the price chart of SPX into 5-minute increments. And I can simply zoom in if I'd like. I can use the slider or simply use scrolling. Now the first time segment of the week is going to be Monday at 9:30 a.m. and everything at this point is in Eastern time. And what we've done is we've looked at the previous Mondays at 9:30 a.m. and we found an average price movement and plotted it on the chart. And we did that for 9:35 on Monday 9:40, 9:45. And then as we get these values, the average movement for each time interval, we then add those up over the course of the week. That is why this chart is called the weekly chart, because we are adding up the average price movement of each time interval throughout the entire week to try and reveal multi-day trends for trading weekly options, because we know we have 5 expirations per week. So again, the weekly chart is broken into 5-minute segments and is added up through the entire week, all the way from Monday 9:30 a.m. through Friday 4 p.m. The main difference between the weekly chart and the daily charts is that the weekly chart will actually include the gap data between time increments. Now, when you think about segmenting the market into 5-minute increments, at some point at the end of the day, around 4 o'clock, the price does not change for SPX. And then on the following day, you might have a large change. You might see a large gap. The weekly chart is going to encapsulate those gaps and average them out for you. But you just need to know that the weekly chart includes the gap data throughout the entire week. So for this particular week, before the week started, we can start to look at where we want to potentially go long or short. Now, obviously, the trend is down, and so we want to pick and choose our spots. But one potential trade could be to look at a call credit spread or naked call, depending how you'd like to trade, at around Monday at 3:30 p.m. because the market was kind of back and forth on Monday, but there clearly seems to be a trend lower where the end of the week has been closing lower than Monday. So what we could do is go out and sell a call credit spread with 3 or 4 days to expiration. A 4 DTE call spread would be selling the call spread on Monday and it expiring on Friday. And I've set this up in option Omega, where we look to open a trade at 3:30 p.m. And just to show an example, I am selling an at-the-money call credit spread, a Delta 50 and 5 wide with 4 days to expiration. And this is no management. I'm not going to get into how different strikes and profit taking and stuff. It's just purely selling an at-the-money credit spread at 3:30 p.m. and letting it go to expiration. In this case, it turned out to be a winner. And we can see the opening price of SPX when we took that trade was $36.94 at 3:30 p.m. We sold the credit spread. We got a $2.60 credit, so about a 1-to-1 risk reward. And then the closing price at the end of the week was $36.40. So there was about a 54-point difference, and we had no closing cost, and we were able to keep the entire credit. So this is just one idea for how you can use these multi-day trends in SPX to trade short-term weekly options.